Okay, so now let me explain to you what I mean by support 10 resistance. We always know that when there is a level below a price level where price refuses to break further, it's always a support level. So like this way, you see price is above this region and it is failing to break this region, so it becomes a support level. Then the moment it breaks and retests, that same support level becomes a resistance. That is what I mean. That same support level becomes a resistance. So this is what I mean by support 10 resistance. So if if you want to be able to trade patterns of this sort, you would need certain components. You would first have to identify the structure of the market, whether it is a downside. When it is facing down, it means you are having continuous break of structure to the downside. You are continuously having lower lows, lower lows, lower lows, lower lows, lower lows, like that sequence. Okay, yes, that is what you would use to determine whether the market is in a downside or not. Then after identifying the structure, you would move on to identifying support 10 resistance levels. So for instance, this way, let's say you're having a market structure of this sort. Now after identifying breaks, the structure to the downside, you would have to identify the support levels. The support levels. Okay, you would have to identify the support levels. Now, immediately after identifying the support levels, then anytime you identify the support level above the support level, above the resistance level, support 10 resistance. So above the resistance level, you are always going to have a supply level above the resistance level. Okay, a supply level above the resistance level. So in assumption, anytime you get support levels this way, you are always going to have supply levels above the resistance level. Sorry, I keep saying support. So anytime I'm saying support, take it like to be a resistance at this point that we've gotten to. So above the resistance level, you're always going to have demand levels. Let me delete this one. You are always going to have demand levels. That demand level is the region where you begin to look for reversals. Okay, that is the level you begin to look for reversals. So let's have a classical look at an example. This is the example I want us to see. This is a live market on the 15-minute time frame GBP USD chart. Okay, now this is a live example. So let's start with our analysis. This is a low, this is a high, this one is a lower low because it's a lower low because it is lower than the previous low, so we are calling it a lower low. Okay, this is a high, but it is a lower high. It is a lower high because it is lower than this high. Then we go again, a lower low, a lower high, a lower low, a lower high, and then a lower low. Right, is this okay? Now we are done with identifying the structure of the market. Okay, now we are left with identifying support 10 resistance level. Support 10 resistance levels. So this is our support level. So you could even see that at the moment market came here, broke it, it tested it before moving to the upside. Okay, and you could realize that the time market got to this region, it started showing reversals. Okay, but it didn't hold. Then let's determine another support level. So this is another support level. This is another support level. Now this support level was broken and turned to resistance, but it didn't hold.